I mean, I think what's interesting is this obviously isn't just a quick risk off and risk back on event. There's more to it. There's more volatility post the sell-off. And I think what the market's telling us is really what macro's been telling you all year, if you've been paying attention, that money's getting tight. You know, Chinese M1 money supply slowed from 25% 2 years ago. It's now running at about 3%. Its lowest growth rate since 1989. Equally in the US, money growth is slowed. So there's not a lot of money around. Fed's over-tightened. Central banks need to loosen. This is what the market's telling us.
So Chris, I'm curious because there have been signs of a slowdown globally, no matter where you look, and they've been around for, I would argue, the better part of a year maybe at this point, yet it was only in the last couple of months that the markets really seem to care. Why?
Well, yes and no. It's only in the last couple of months the US markets have seemed to care. The rest of the world's been in a downtrend since early this year, since the Jan highs. So, you know, this is not a new phenomena, really. It's just simply the US was the best of the bunch and was the last to go.
So Guy Adami mentioned something interesting in that last segment. He said it was about the divergence in U.S. markets versus other parts of the world, maybe specifically emerging markets. Was the U.S. going to fall down to catch up to the rest of the world, or was the rest of the world going to lift itself up a little bit to catch up to the U.S.? He said somewhere in the middle. But the preponderance is where, do you think, at this point?
Well, of course, it's a great question. He's absolutely right, and it's what many of us have been asking all year. And the really key now is it all depends on the central banks. How do they behave? The Fed's signaling it might want to go on a bit of a pause next year, but we need more signaling from that. The Chinese are not easing enough, and I think, you know, the Europeans are going in the wrong direction. They're still reducing QE. So, in my opinion, it really depends on what the central bankers get up to. Personally, I think they'll change their tune, but I think markets need to go down more before they do that. So our playbook is rally into year-end from here. We're base building. I think you buy at the lows on the DAX. You buy if the S&P gives back a few more points here, and we see some rally through to year-end into Q1, and then we get another big pullback, I think, that changes the minds of the central bankers.